In the calculation of cash flows resulting from the investing activities of the business, one item needs special attention, which is sale or purchase of fixed asset. The information on sale or purchase of fixed assets can be given to you in different ways. Let us analyze this information case by case. In the first case, you may be given the opening and closing balances of fixed assets. For example, machinery rupees 60,000 in the current year and 50,000 in the previous year. This means the opening balance was 50,000 and the closing balance is 60,000, which simply means there has been an increase of 10,000 in the value of machinery, and you can call this purchase of machinery directly. Alternatively, if there is a decrease in the value of a fixed asset, you can call that sale of the fixed asset. In second scenario, you may be given additional information to go along with the opening and closing balances of fixed assets. So in this case, you have information on depreciation. So machinery is 60,000 in the current year and 50,000 in the previous year. And there is depreciation equal to 5,000 which was charged on this machinery, this fixed asset during the year. Let us see how we analyze this information and how we account for the values given herein. So we need to prepare a machinery account. Machinery being an asset will have debit balance. Opening balance is 50,000. And closing balance is 60,000. Now the additional information says depreciation was charged on the machinery equal to 5,000. Now we know the entry for this would be depreciation debit to machinery account, which means we need to go to the credit side of machinery account and record the amount of depreciation equal to 5,000. After recording this, you have 65,000 on the credit side, which indicates there is a balancing figure of 15,000 on the debit side, which will indicate purchase of machinery. Purchase of machinery, and this is a balancing figure. So in case you have been given depreciation, you need to take into account that information as well, and that increases the figure of machinery purchased. If you treat this as the first case, then you would simply assume that machinery worth 10,000 was purchased. However, that is not true because the value of the machinery also went down from 50,000 to 45,000 and then increased to 60,000, which makes the purchase worth 15,000 and not 10,000. Let's have a look at the third case in which the information on sale or purchase can be given to you. You have the same information on opening and closing balances and the depreciation, and an additional piece of information which is given to you is the machinery costing 10,000 is sold for 6,000. Depreciation on this piece was 2,000. Now let us see how we record this in the machinery account. Again, you have the opening balance, and the closing balance. You have the depreciation equal to 5,000. Now about this additional piece of information. You have a machinery that costed you 10,000. That was the cost, and the depreciation on this piece till date is 2,000, which means its current book value is 8,000, and it is being sold for 6,000. So sale price is 6,000, which means you are at a loss of 2,000, loss on sale. Now, what is going to be the journal entry for this? When you sell, you have cash coming in, so cash account debit, which means you are going to write on the credit side. So you have buy cash, which is sale, and sale amount is 6,000. And then there is a loss on sale, which is 2,000. And the depreciation on this piece is already included in this total depreciation, which was charged during the year. Now, after accounting for all this information, we need to balance the accounts. 73,000 on the credit side. Now, this inflates the figure of machinery purchased to cash. This is the purchase of machinery, and this is the balancing figure. Now understand the treatment of this transaction as follows. The journal entry would be cash account debit for 6,000, and machinery goes out. So machinery credit for 8,000 for 10,000, that is the value of the machinery, and there is depreciation, which is 2,000, and then there is loss, which is 2,000. So here is the journal entry for this transaction, and because machinery is being credited by 10,000, you have to bring all the items in the debit to the credit side of machinery account. So this 6,000 is shown here, the 2,000 of loss is shown here, and this 2,000 of depreciation is included in this 5,000 because that is the total depreciation on the machinery which is charged during the year.